And good evening. This is the Elliott wave update for the S&P 500 from Monday, February the 14th, 2022. Interesting day in the market. We saw some strong gains being made as people moved back into Amazon. Some moved into Tesla. It got overflow, and we saw a lot of other different stocks where buyers kind of started to come back into the market. Could have been a result of Friday's expiration or just getting new positions going. In any case, let's take a quick review of where we left off last night and then what did take place and what we can look forward to moving forward on this. I continue to count what is going to either be a C wave down in the form that this is still remains the ultimate high, which is at 4808. And this I have labeled as the endpoint for intermediate wave one, but as I've been discussing, it may be an A wave. We still have a little bit more to go before that determination could be, but normally when I'm counting a corrective phase on this degree of that large, I will start by looking for 5 waves down. So that's I got. And so I placed an intermediate first wave here, intermediate wave 2 here, and again, ABC. So it's either going to be wave A and B or waves 1 and 2, and we're in that third wave going down. And it makes no difference in terms of whether it's an intermediate third wave or an intermediate C wave. A third wave and a C wave are close cousins, so to speak, in that they carry the same characteristics, the same destructive power, the same acceleration power. Everything that you find in the third wave, you will also quite often and normally find within a C wave. So in either case, I'm expecting still a fairly large continuation of a move down, whether it's a C or a third. So within that, I'm going to drop back down to the hourly chart. I've marked that we've completed minus wave 1 and 2. And within this intermediate third wave or C wave, we're going to be counting 5 waves of minor degree. So this would be 1 and 2, and we're in that third. Now, where I left off last night, I said, well, I'm expecting at least an additional decline to likely dip below or hopefully get even lower than the next support level, which was at 43.58. We did get a little bit below, got to 43.54 overnight during Globex, and then rallied back up. So what I've gone ahead is that, again, we're inside this minor third wave. And once again, I am not sure that this is going to be a minute 5 waves, or if it's going to be sub-minute 1, 2, 3, 4, 5, and then that is going to be minute wave 1 of a much larger third wave coming off. And I'm still leaving that out there, but I'm including it because it is a possibility that this third wave opens up and just really develops into some stronger downside. And we don't want to be counting too fast and then realizing that there's still so much more to go. So as I discussed yesterday, that will remain in that near-term picture until we can figure out what degree all this is coming off in. Is it a sub-minute or is it a minute, to figure out where we're coming in within that minor third. Again, third waves, longest, strongest. C waves, longest, strongest. They can be very strong within an ABC. So we've still got a lot more downside, in my opinion, to go before this particular move is complete. So thus far, let's just leave it as it is, that I have a minute 1, 2, and a 3. So I count down the 5 waves, which completes that internal third. And then we've bounced. Now I'm going to open this up so we can take a peek inside. And here's the 5. So I put the 3 there, and we're in that 4th wave. Now it does seem pretty clear that this was the A wave up. Then we got a B, that would be the A, the B, and then a C of the B wave. And that would put so this would be up to here, A, and this would be B. And under that, we'd be in the C wave, more than likely just going to come back up towards that 4420 area, maybe poke its nose just above, but it would end up being an ABC flat. And you can see how that flat works, where we have the A wave, and then we've got the B wave, it does not exceed and comes back down and does not exceed there. And then we're going to have a C wave as we rally back up. And I would not anticipate at this juncture that that C wave will get that much further ahead of 4420, which 4420.25, which is where the A wave completed. Once that is done, I'm again looking for a fifth wave down. And just to kind of show some of what lies ahead and as possibilities in terms of levels, we can add, since we now have the 3, and I'll call the 4 there. We know we got maybe a little bit more, but this is just for an estimate now. We're not throwing down levels that would need to hold. All right, so we go from where wave 3 started, or the top of wave 2 in this case, and it goes there, and I go down to the bottom of wave 3, and then I come back up to what should be that high of wave A, and possibly it's going to be the same for wave C. So let me just put it over here. Come on, give me that right. There you go. Okay, so if this is the case, and we don't get much further above 4420.25, then what we're looking for in terms of a fifth wave, as it compares on a Fibonacci basis to the third wave, wave 5 can come in at 0.618 of wave 3. That's at 4279 or 780. More than likely, we're going to be looking for it 100% because of the strength that we're getting out of this wave coming down from here, that we could push down to 4191. And then the next after that would be 1.618, which is 4050. Now, as you remember, I continue to have 3990 down below. And that still is within the picture because I have a zone that goes from 4050 all the way down to 3963. So that's all based on what I've just added. And again, this particular Fibonacci extensions may be adjusted for how this wave 4 actually does finish up and where it finishes up. So what can I look for tomorrow? Basically what I'd be looking for, and I am going to take this off because it's not totally accurate in terms of we don't know the wave 4 is complete yet. So I'd be looking for the market to continue to rally, come back up to at least 4420, possibly a little bit higher. Right now, it's going to find some resistance at that 20, the hourly 20 MA. It's already touched it, drifted back down. Now it may come up and test it again, and that's at 4403. Then we have 4413, 4420. And then above that, we have additional resistance at 4428. So the C wave could possibly get up to that price point at 4428. And that would be expected to hold. Definitely, I would think that the hourly 50 at 4436 will hold this particular rally and then turn the market lower again to finish out the larger 5 waves down on the minute level. And again, we have potential to get down to 4200, 4100, and then actually all the way down to from 4050 down to 3983, I think it was. So we still can have a sizable decline from here, and that would be just to finish this minor third wave. And then, as I have been discussing, we would then have a minor fourth wave and then still a minor fifth wave. So that's why I continue to look for the possibility that we could be coming down all the way into these zones down below if this third wave gets itself to 3990. That would be the minor 3. Then we have a minor 4 and a minor 5 bringing us down to here. That would then finish this intermediate third wave. And it is from that point, then we'll be looking for the market to let us know, is this going to be turning into a 5-wave intermediate structure down, or is this going to be A, B, and a C? And that then forms primary wave A. So a lot going on, a lot to still come. And we cannot forget that there's continued pressure because we still don't have a resolution to what's going on in the Ukraine. I know there's a lot of diplomatic discussions going on, et cetera, but nothing's really been going on that people are going to start to withdraw and that, okay, no more threat of war. So that still is on the table and it still hangs over the market. Also, we did have the Fed go into an emergency meeting today, but from what I was reading, it really wasn't to put through an emergency interest rate rise as previously discussed, but probably more on repos and just the tapering that they're going to have to probably kick in. But it could include a 25 to 50 basis point rise. And that would all come before that March meeting. So we'll see, because I've not read where I saw any news that came out as a result of that meeting. So for tomorrow, I will be looking for the completion of this small fourth wave and a resumption in the form of a fifth wave down. I'd be looking for that this low actually at 43.54 to be broken, for 42.88 to be broken, from 42.17 likely to be broken as the market continues to head into this zone, and then possibly as low as 39.90 to finish the interior third wave. And we run the possibility that if not, and we get third wave comes in here, we get a 4 and a 5, then we'd be looking for the minor third to finish down here to here, get a 4 and a 5 to complete that intermediate third. So there's still quite a bit of action to come to the downside. So trade wisely, trade according to what your moving averages are telling you. Again, today, we didn't really see, everything pretty much stayed in alignment on the hourly chart. We have the 200, the 50, the 20, the 8 and the 4, all still in alignment to go down. And that is with a fairly solid day where we saw the indices rally, decline, and rally. So everything kind of stayed in place on that level. And I'm going to leave it there. Again, looking for the completion of this small wave 4 and top side 44.36, possibly. If it starts to break above that level, we will reconvene and take a look at that. I'm not expecting that right now, but continue to trade what's in front of you so that you're not going to be caught up shorting into something that you maybe should not be shorting into. Take your cues from the price action, from actually what your moving averages will tell you, from what the Fibonacci and the Elliott will tell you. So I'm going to leave it there. Our next update will be on Tuesday, the 15th of February.